What's up, everyone? Want to wish everybody a happy Thanksgiving. And on that happy note, I would like to show you and share some good news in S&P research. Anyway, setting up something for next week. So here we have a simple Fibonacci tool, and we're going to analyze the previous market sell-offs and the bear market rallies we've gotten every single time. So to also, if you want to discuss any of this, more than welcome to stop by our free Discord and Telegram group. Link is in the description page. In any case, every single pump into from a bear market rally after the sell-off is usually about 618 to 786 fib. Let me show you what I mean. I'm going to remove all the other fibs to make it easier to see, and I'll show you how predictable every single one of them, uh, every single bear market rally is. So this was the initial leg down. As you can see, we've tagged exactly 618 and dumped. Let's see what happened next. This was the other leg down. Again, we've retraced exactly 618 and dumped. We didn't make a new low, but we still uh, almost we reached the previous low here. Now, this was a big rally, breaking the structure as you can see here, right? Making a higher high. Everybody were pissing their pants, thinking this was the bottom. Let's rock and roll. Was a very annoying bear market rally. I remember it very vividly. Now, looky here. If you measure this whole leg down on a weekly, wait, there we go. If we measure this leg down here, this weekly leg down now, we go to 618 to the between 618 and the 786 cell zone yet again. All right. So we have 343 now. Major sell off again, major leg down here. Where do we go? 618. Every single time the zone between 618 and 786 is the top, plus the moving 200-day moving average comes in here and caps it nicely. As you can see, it's been being respected rather well. Now, so you might ask, what's happening now? Well, let's see what's happening now. We just completed a major leg down. We're making higher highs now, just like we did uh, here with this rally, right? We took out the previous swing high. We took out the previous swing high. We're rallying. Everybody's thinking that's it. This was the bottom. The music is back on. Let's party, etc. So look at where we are right now. We're above 618, between 786. Not only that, we are being capped by the 200-day moving average. And not only that, I have a little surprise for you, even more still. Check out the uh, how um, how S&P likes to produce spinning tops up on top. Now, this chart was posted when we were literally right here at the previous 200. I made the post saying it's gonna get there, and we're gonna give it. If we're gonna get we've gotten a spinning top, we're gonna get a sell off. We did get a sell off, and if we're gonna get another spinning top here, that's gonna be as in showing that it's running out of steam at a resistance, and then followed by uh, a start of the sell off, etc., etc. This is going to be a nice swing trade. Obviously, you can utilize trend lines, trend line breaks, whatever you want to enter into position. So you don't have to short right here, but even if you short here and you get all of this, or even target this bottom here, that's still hell of a risk to reward right there, and a hell of a trade. So maybe let's wait for this price action to top out, take out this previous swing, make take out the structure, break of structure, take out the trend line, and if we start seeing it rolling over, that's we put the stops above here, and we target these lows or below. Now, like I said, there's plenty of these spinning top examples here. Some of them better than the other, but usually when you get a spinning top followed by a nice bearish bar, you get at least some type of sell off and a follow through. Okay, every single time, every single time, every single time. You get a again, not just a spinning top, but a spinning top with a 1 day of sell off, which then follows uh, nicely. There's always a nice follow through. Okay, so even if you were again not selling even after this bar, or you after you saw this spinning top and then only this bar, so even if you only sold it here, still plenty of room to run. So for next week or the next 2 weeks, I'm looking for this rally to peter out, and hopefully will give us some selling opportunities. Now, let's see where it can um, peter out, right? So, what's interesting here on this daily chart, you have this uh, order block sitting right here. So, I think very likely that we shouldn't see price action above it, and if we definitely shouldn't see the price go above this point right here at 41.60. I think we're somewhere in the vicinity of the top, and on the shorter term time frames, we can see that the momentum was already diverging big time, and even when we were diverging at this local top here, right, you see that there was a nice sell-off followed. So even if this is um, not the top, it's still running out of steam, and we are still looking for shorts because it's going to be offering us nice resistance for a shorting opportunity. And even if you don't get to these lows and you get a 50% retracement, so somewhere here, for example, it's still a lot of well, it's still a great trade, right? Because your risk is literally limited, and all you have to do is wait for a reversal formation if you want to, or you can start layering in as well. But I would rather be safe in this point and have some kind of formation that, again, it loves those spinning tops, indecision, followed by a sell off, and then it accelerates because people start exiting their basically their they start profit taking, and they exit their positions, and this thing just accelerates. As you can see, the bars are already getting very choppy, anemic, etc. So I think we're approaching, we might be somewhere here, so maybe a little bit more up before we finally roll over. uh, I think that this is there's also in Elliott wave there's an equality of legs. So let's measure again. How precise is this? This leg, distance of this leg, A, B, C, A equals C. The equality targets exactly the top of this, and you can see that both prices closed at this level. So this level is going to be probably key. And if I get to this level, I will short it with my stops above this point, or better yet, this point. 100 point stop to target 500, 600 points is you know, 5 to 1, 6 to 1 risk to reward, fucking excellent as a swing trade. Now, the only concern that I still have is this bullish candle on monthly candle, engulfing candle on US 30. That's the only thing that is of concern to me, because it's and the break and again and a breakout to the top side. But again, we're being capped right now, right at the resistance. So as long as we don't start breaking out too far from here, and start rolling over, this is going to be also something that will give me a clue that if US 30 starts rolling others will also follow suit, as this was the strongest one of the bunch in this bear market rally. As you can see, Nasdaq is very anemic, can't even get to the trend line, it's already stalling, etc., etc., and probably already have the leg equality from here to here and here. Probably these are legs are already equal. So S&P is somewhere in the middle, and like I said, we are approaching this. We're in this channel, right? We are approaching key resistance, and I'll be basically waiting for a sell either here. Worst case scenario, uh, there's another a very nice order block right here, right at 786. So we can definitely tap 4140 if we blast through this. But there's way too much resistance. Basically, we have the channel resistance, we have the order block, and we're above 618 between 786 and 618, where previous rallies ran out of steam and rolled over. So again, we can utilize basic trend line. We start closing below it on a shorter term time frame. We have a close below, sell it, put stops above the highs, and even if you get stopped out one or two times, you eventually will catch the reversal properly, and then you have a free fall action for the next couple of months. How long this? So this took 61 days, so 2 months, and then it followed by 2 month worth of sell off. So if this is 40 days, so this is 1.5 months. So let's say we prolong that, we do a lot of bullshit sideways nonsense, which I doubt, but let's say we do that. Then you will have then another 2 month. So basically, if we get a Christmas rally into the December and we still rally into these zones here, which is fine, we're still gonna get come January a nice present for New Year's and a rollover. So I'm gonna ignore the Christmas rally, and I'll be waiting for again a rollover, because the zone between 618. Well, let me see where the old S&P 500, the one I was using. So as you can see, the 618 and 786 provides, plus the order block here sitting right above. So we week through 200 and we start rolling over. That's going to be my signal for a sell. So I really hope this is going to happen prior to Christmas, and this is going to be my Christmas present, this rollover, instead of getting a Christmas rally, which is really long in the tooth already, and there's no risk to reward here. That makes sense to be buying at this point, at the stage of the rally, because you're going to be buying basically at the top, so, or near the top. So I want this move to exhaust itself, and if you really want to buy the stock market, you can actually wait for a nice corrective price action like this, at least, before you're going to start buying the dip. But at this point, there's no buys. There's either wait for the correction to buy the dip, or fade the move to sell the correction or new lows, depending on how aggressive you want to get with your short position. All right, as always, more than welcome to stop by apextool.com. You can stop by uh, the Telegram group, the Discord group, where most of the stuff is free. Stop by, say hi, discuss this. We welcome everybody. Hope it helps as always. Enjoy.